all of us go to November 2019, question number 4, boy. November 2019, question number 4, boy. November 2019, question number 4, boy. We are tackling what we call business asset valuation models, which are important models because of our exams in financial management of intermediate level. Don't forget that my name is Dr. Joshua Aura. I teach financial management, advanced financial reporting at RCM Online College. That college that believes in 100% virtual training, where we believe that Zoom works, magic, and we should be able to say, all of us, no to traditional classes. They are not effective. That's quite a good curtain raiser for the question that I would want to do, which is November 2019, question number 4, boy. Question number 4, boy. Question number 4, boy. Question number 4, boy. So we are told Riverside Limited requires shillings 4.5 million to finance an upcoming project. The firm's existing share capital constitutes 120,000 ordinary shares whose current market price per share is shillings 100. The management of the company has proposed to raise funds through a rights offering at a discount of 25 on current share price. We are required to do a few things there, but before I go there, ladies and gentlemen, we have in this case here a rights issue. And this rights issue is spelled like this. It's spelled like this, that we are given 1 new share for 2 or 3 of shares held. So the current market price per share is 100. And then of course the rights issue shares, share price will be 70. So if you're given this kind of information, and then somebody wants you to get what we call the TERP, the theoretical X rights price. Somebody wants you to get the theoretical X rights price. How will you be able to get this theoretical X rights price? I'm so sure if I gave you guys a minute, because you guys are geniuses, you'll be able to give me an answer to this very fast. But in the interest of time, and I'm not here to measure intelligence of anybody really, in the interest of time, just allow me to answer this. So the theoretical X rights price, after the rights price, after these guys have picked their rights, of course, you expect the price to go down. We expect the price to go down. So how do we get this theoretical X rights price? This is the easiest thing ever. What you do, we are saying it is 1 new share, and the new share's price is 70. This is the share that you are giving out using the right. So the new share, the rights issue share price is, so this 1 new share is 70 bob. Is 70 bob. Versus now in our basket, we shall be having that 1 new share and then 3 of the old shares. 3 of the old shares. And we know that the old shares normally go for the higher price. They go for the higher price. So 3 old shares at 100. So then when I want to get the theoretical X rights price, because I'm so sure you guys could be using a very bad method, a very bad method. So in this case here, 1 times 70. My daughter tells me 70. 3 times 100. My 3-year-old daughter will tell me that this is 300. Now, when I add in this case here, then the value of my products in my basket, total value will be 70 plus 300, which gives me 370. But you see this 370, this basket has got a value of 370. But now inside this basket, how many shares do we have? Inside this basket, how many shares do we have in total? Who is following me? Who is following me tonight? How many shares do we have in this basket? Bible tells me 4. 1 new, 3 old. So you've got 4 shares. You guys are right. So then if you've got 4 shares which are worth 370, then what is the price per share? This price per share is what we call the theoretical X rights price. It's what we call the TERP. So the TERP in this case here will be the 370 divided by 4. 370 divided by 4, which gives me 92 point what here, somebody? 92.5. So to get a theoretical X rights price is the easiest thing. If you can't understand really how to get the theoretical X rights price by the time we finish today's class, then I will send you to go and do another course. Perhaps CPA was not for you. But of course, all the students that I have online, you guys were meant to be accountants. And that is why I have a high belief that you shall be able to understand how to calculate a theoretical X rights price. So then that is a great eye opener. It's a great icebreaker. It's a great, ladies and gentlemen, cap and raiser to my question, which is November 2019, question number 4b, where in the requirement, they want me to give them no's. How can they give me this kind of a thing? These examiners are a serious examiner. At this level, we need examiners as students. We want examiners who complicate our life a little bit. Don't give us very basic things as if we are nursery school students. No, make our life. Somebody, I was watching something in TikTok, which reminds me, by the way, we are on TikTok. You need to follow us. How I wish you guys were great. You guys would have followed RCM Online College on TikTok. Like if you do that, then I will be able to get 70 followers immediately. RCM Online College, you should be able to get 70 followers immediately. My target is to reach 1,000 so that I can be able to go live, teaching these things on TikTok, live. So are you guys going to follow RCM Online? You must help me. I'm helping you tonight. So when I ask for simple favors, even right now, if you have a phone there and you have access to TikTok, why don't you just flip through, look for RCM Online College, follow and share if possible. And then you tell me, yay, I've already done it. And then we'll see today I'll be able to teach you guys up to 12 midnight. Because you've done me a favor. Dan, like Rachel, thank you very much. 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 Great. Done. No, it's only Rachel who has done it. The other students have not done it. So let's see here. So they want me to calculate number of shares. So number of shares, how do we get this? Number of shares, is the easiest thing. So in this case here, I will take the capital required. The capital required. It can't be over par value because there is a discount involved. Here we are issuing them at a discount. So we talk of the capital required over issue price. So how much capital do we need? This examiner has told us we need 4.5 million. We need 4.5 billion all over the issue price. Issue price, they gave us 100. Let me first of all breathe a little bit here and see whether there is any single student who will be able to give me the correct issue price. Who will be able to give us the correct issue price. Thank you, Leonard has been able to follow me, including his family. Thank you so much. That's great of you. Then we have Isaboke, anasema ni mzee kidogo. Isaboke, we shall overcome. Hakuna uzee. You could be old, maybe your age is advanced, but you are young at heart. That is the most important thing. So they are telling me 75. Anybody who is saying 75 has seen some light, like the one that Saul saw when his name was being changed to Paul. 75. Remember, par value is 100, but you're going to issue these guys with a discount of 25%. So there is a discount being issued there. So in this case here, the issue price, listen to me very well. The issue price will be the par value multiplied by the discounted percentage. When we discount 25%, we'll be left with 75%. Then this would mean that our issue price is 75. So please come here and divide this by 75. Give me an answer now. I would have comfortably divided this thing like we are used to, dividing it by the par value. But we've been told that this time around, because it's a rights issue, it has got to be a bit cheaper. We're going to give a discount, and therefore we shall work with a discounted price that we shall call issue price. Thank you, Ken. Ken will download. Mwalimu, you're fantastic. I will help you people. Thank you so much. So in this case here, 60,000, 60,000. And then of course, as usual, whatever small you get correctly, you need to come and do what here? Scare the examiner by double underlining. Double underlining, you scare the examiner. And then you skip like 2 or 3 lines. Then you write Roman 2 of the question. Write Roman 2 there. You must scare the examiner. Scare the examiner. I realized, you know, these things, like now there is another one who was drawing emojis. So you get somebody now is very happy that he has gotten this correctly. So they come and draw something like this. Another one in this case here goes to a page. He realizes that he's not even able to write even nothing. So what they do, they just go and draw a big emoji, which now shows that they are very sad. Something like this, pulling their mouth south, or rather east, like that. We shall overcome. This is not your portion. Your portion is here. In your exams, you should be smiling throughout. You should be smiling throughout. Yes, you should be smiling throughout. Great. So now we go to Roman 2. We go to Roman 2. We go to Roman 2. So Roman 2, they want us to give them the number of rights required to subscribe for 1 new ordinary shares. I love this. How many shares do we have currently? How many shares do we have currently? Existing shares are how many? Somebody talk to me. Existing shares are how many? How many shares do we have currently in the question? How many shares do we have currently in the question? 120,000. Thank you very much. So if we have got 120,000 shares, then each share has a right. Remember that concept. 1 share equals 1 right. So if you have got 120,000 shares, then automatically you've got 120,000 rights. That's a mark. That's a mark. I'm so happy. So if the examiner tells you from the balance sheet, you've got 1 million shares, it's upon you to know that normally it's 1 share, right? So if you've got 1 million shares, then you've got 1 million rights. Here in the question, we are told the existing share capital constitutes 120,000 ordinary shares. So if you've got 120,000 ordinary shares, then automatically we have 120 rights. 120,000 what here? Rights. Ah, great. I love this so much. I love this so much. So the 120,000 rights, that is never debatable. 120,000 rights, that will never change. What will change is this circumstance of the new shares that you want to issue. So this time round, how many shares do you want to issue? Given the capital you want to raise, 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 given the capital that you want to raise, how many shares do you intend to issue? 60,000, 60,000. So this entire rights that you have shall be shared amongst those new shares. So I'll come here. Remember, this is very important, but you must double underline this to scare the examiner, and then you start something new here. You come and say that these 60,000 now new shares that you have, you want to give to these guys. The 60,000 shares, ladies and gentlemen, you are going to have all of them eating the 120,000 rights. The 120,000, even if you are that 1 new share being issued, it has to consume the entire 120,000 rights. So then the question is, you need to come here and tell us, how about 1 share? How about 1 share? So then this 1 share, if you try doing your abracadabra, the 1 share will be 120,000 rights, 120,000 rights divided by 60,000, like that. So could you kindly cancel this and this? You realize that 1 new share equals 2 rights. 1 new share equals 2 rights. Scare the examiner. Scare the examiner. They'll think that you're very bright. They'll think that you're very bright. Trust you me. This examiner, if the question is worth 3 marks, the examiner may end up giving you 4 out of 3 because of how you are scaring him. Scare the examiner. Scare the examiner. So listen and listen to me very well. They wanted as number 2 to give them the number of rights required to subscribe for 1 new ordinary share. That is the end. I would want to repeat this. This one I must repeat. This one is the easiest. This is the easiest. I'll get all the marks here. And to repeat, I would always start. This is the first thing. The starting point is here. You start with the existing shares. How many existing shares do you have? 120,000. So it means that each shareholder must be given 1 right. If you've got 120,000 shareholders, assuming each one has got 1. If you've got 120,000 shareholders and we've got 120,000 rights, always to give them, to play around with them. And then from there, I'll remember up there that to raise this new capital, I need to issue 60,000, 60,000. I need to issue 60,000. I'll need to issue 60,000 what year? Shares, new shares. So then these 60,000 new shares must consume the entire rights that we have. Must consume the entire rights that we have. So 60,000 equals to the 120,000 rights. How about 1 share? Then you get your whole marks, and then you will go to the next level where you'll teach people how you knew. Ati mimi nilikuwa hatari sana kwa FM. Na kumbe mazeni kufluke. Anyway, no, so long as you pass. The end justifies the means. And then there is something that so many students confuse. Like when you are told to interpret this, how will I interpret this in form of right? It means that I will be having 1 new share for every 2 old shares. Remember, rights are always the same as old. For every 2 old shares, this is how we interpret this. 1 new share for every what year? 2 old. For every 2 old. For every 2 old shares. So now let's go to number 3. Number 3, they want us to give them the TERP, the theoretical X rights market price per ordinary share. Can I give you 1 minute to try calculating that TERP? We see how you will be able to get it, because I'm so sure you shall get it. Let me see how you will be able to get this. Let me see how you shall be able to get this. Is there anybody who's writing something, or am I wasting time? Please be very honest. I don't like wasting time. If there is nobody who is writing even nothing, you tell me mwalimu in German, akia mongen. I see nothing, I understand nothing. You'd rather do the question. So please, as my students are writing up something, don't forget to subscribe to my YouTube channel. It's very important. I'm making a humble plea and ensure that you are subscribing to that YouTube channel, because I would want to use this YouTube to create a nice pension scheme. Today, I was passing around a KRA place, and then I saw what they call CBK pension towers. Is there anybody who has ever seen the CBK pension towers here? Is there anybody who has ever seen the CBK pension towers in Nairobi, around the KRA area? Around the KRA area. Yes. So one thing that you realize with CBK, as you guys write those pension towers, they're twin towers. And the one tower is bending like this. And then the other one is bending the other way. So, you know, pension is for retirees. And if you look at, for example, the inspiration, the architect who drew this, the inspiration was about old age. That when you age, by the time you hit 70, Lydia, Paro, It doesn't matter how straight currently you're walking with those high yield shoes. When you hit 70, you shall start bending. Bending. And that's what they are telling you today at the stability. Down here, their foundation is very stable. Today, when you are very stable, try to work on your pension. And you know why these twin towers are looking opposite of each other? If you're married, by the time you hit 70, chances are the husbandee will be bending the other way. The mamu will be bending the other way. They are not seeing eye to eye. And quite sad, at that time, the husbandee will not be having even nothing. You'll not be able to afford Panadol. This is very educative. Whenever you pass around there, try to look at that inspiration. And if possible, just look for the inspiration of CBK architecture on Google. You'll be able to get a lot of information there. Great. So we have here one new share, two old. So the most important thing is for you to understand here the old shares price. The old shares price, is there somebody who can remember? You know, the old shares price is the current par value. It's given there. The old price, the current market price per share is 100. And then we have the new share price. The new share price, you guys gave me a figure of 75. You guys gave me a figure of 75. And you've just told me that one new share, each at 75, new share, each at 75. And then we have two old. We have two old shares, each at 100. Each at 100. So 1 times 75 is 75. 2 times 100 is 200. So when I add the two, I'm getting 275. For how many shares? When I add this and this, I'm getting 3 shares. So 3 shares equals 275. How about 1 share? One share? So 1 share will be 275 divided by 3. 275 divided by 3. 275 divided by 3. 275 divided by 3. 275 divided by 3, which will end up giving me how much? 275 divided by 3. They are now not talking to me. They're not talking to me. It's 91.7. 91.7. So I'll come and write here, just in summary, the theoretical X rights price. The theoretical X rights price. The theoretical X rights price is 91.7. Scare the examiner by double underlining. Ladies and gentlemen, we are teaching a subject called business data analytics. I teach also business data analytics at the advanced level as an exit paper, which involves a lot of what here? Advanced Excel, the pivot tables, etc., many things. One of the challenges we have discovered that is bedeviling students who are coming from these lower levels to that paper directly is that most of them are so poor in advanced Excel. Most of them are so poor in basic and advanced Excel, which really distorts our syllabus up there, because the syllabus up there needs us to assume that you guys are good in Excel. And you can only be good in Excel if you start practicing Excel as early as when? As early as yesterday. So because I know most of you will be coming to this BDA paper, say in a year's time, or by next year, talk of the, say, 1 year time, 1 year's time, 1 year's time. The school has made arrangements for you guys to be taught, because it's me who shall be teaching, basic and advanced Excel. Immediately after you finish your exams, I'll give you like 3 days to rest. After you rest, that is 1st of May, that holiday. From 1st of May, every evening we shall be teaching you all those concepts of what here advanced Excel. 6 days. 6 days. Whatever, 6 days, right? So once we finish those 6 days, we'll have gotten quite good skills of advanced Excel. We shall be able to complement those classes here with videos. And then most importantly, we shall be able to give you what here? we shall be able to give you a certificate, independent certificate, which will be very important. But the most important thing is that you shall start practicing this Excel quite early, because when you come up there, it's going to be more of applications. How do you develop a model? A model that will be able to forecast cash flows and give business value, like, for example, CIC insurance. How much is it worth? Look at the premiums, insurance premiums, discount them. So you need to understand this Excel very, very early. As our students, of course, you know that we normally charge 3,500 for this particular course. But if in this case here, you're going to pay by the 17th, on or before 17th, I don't know whether it's today, you will only pay 1,500 if you're a student from RCM. If you're a student from RCM. Students from other colleges, you must pay 3,500, no discounts for you because you made a wrong choice. How could you miss this kind of a college, honestly? Ladies and gentlemen, it has been a pleasure hosting you tonight. I look forward to meeting you tomorrow. At what time? What time shall we be meeting tomorrow? They're forgotten. And I hope you guys will be, subscribing to this channel